And you had the Governor of the Bank of Ghana, Dr. Johnson Isiema, sharing his thoughts on the Ghana cedi reserves and the IMF program. Let's hear now from Seth Terkper, former Minister of Finance, Economic Advisor to President John Mahama on the economy, the cedi and the IMF program. Welcome to our coverage of the annual IMF Spring Meetings, and also welcome to PM Express Business Edition as you talk about the economy and the IMF program. Yes, of course, the IMF program or the IMF meetings have ended in Washington, D.C., but discussions about Ghana's program and the economy would not go away. And therefore, that is why on today's edition, we are engaging the economic advisor to the President, Seth Terkper, to get his thoughts on the economy and also how the program is going, and also how do you ensure that we keep on track. And thank you so much, Honorable Seth Terkper, Economic Advisor to the President and also a former Minister of Finance. So let me first get your thoughts. How would you describe this meeting? I've seen you in some of the meetings as well, per the pictures I saw. How would you describe these meetings?
Yeah, thank you very much. The meetings, there are two major meetings of the IMF involving all of its member countries. That's the spring meetings, which is the smaller of the two, and the annual meetings, which takes place in October, at which the IMF, has to account more formally and in a very significant way, to the member countries about its performance, both on its operations and on its finances. But from the perspective of Ghana, there are two aspects to this delegation coming to the spring meetings. As you said in your introduction, Ghana is in an IMF program, and the fourth review was just concluded in Ghana ahead of the delegation arriving in Washington. Obviously, one of the things that happens is that the officials of the IMF, including the managing director, makes time to meet, and heads of department make time to meet, as many delegations, if not all delegations, including they are led by often, the directors, to engage them on specific country issues before the more general issue, which is the second aspect. In our case, because the fourth review was just concluded in Accra, and we were fortunate, in any case, more positively, having a staff level agreement, which means that the staff had agreed in principle that the program, was on track. It stands to reason that coming here, further discussions will be held with respect to preparations being made to go to the IMF board, where the fourth review will be approved. Tentatively, we know it's in June. The country delegation and the staff mission, from the IMF that came, would also take the opportunity to iron out a few technical details, some of which we may not have given them complete information, but promise to update wise at the spring meetings. So these these are the two elements which are very important for Ghana: participation in the spring meetings as a member country, but also a bit more focus on ensuring, led by the minister and the governor, that all is well, all is moving well, to go to the board and to get approval for the fourth review, which will come with some resources. I think in this context, one can say that the IMF continues to be satisfied, with the progress that has been made since the Mahama administration, came to, power. And within a short period, following the economic dialogue, as well, of course, the transition started, and then the economic dialogue, the SONA, and then the budget. I think one can get a sense that the fund is, fairly assured, that the remaining issues will be ironed out, and, we would go to the board and hopefully go through, the board agreeing, to the recommendations made in the fourth review.
Oh, no, but there are some who are worried about possible complacency setting in, and the fact that you've had the fund give you a thumbs up, you're on track. You have the MD in the meeting again, praised Ghana, but the progress that you made. How do we guard against complacency? Because that's the fear, that having all these thumbs up, things are kind of going well for the government. If you want to describe that as honeymoon, maybe it's for another debate altogether. But that is where the fear is. And how do we make sure that we stick to the books and not get off track?
Well, I don't know if it is complacency per se, but I know that the President Mahama's administration is not complacent. In the first place, this is an administration which, has both as president and vice president, and now into the second, tenure of the president, has been involved in IMF programs, also as a parliamentarian, as a minister. So I think there's some familiarity with the president, and his team to know, when things are going well or they are not going well. Secondly, the IMF is very rigorous, and IMF is not looking at the Mahama administration per se. The IMF is looking at the sovereign, meeting his commitments. Once you take over an IMF program, once you make it overlap an election, as happened in 2016, I think it stands to reason that it's a sovereign that is facing, the IMF. And I think the MD and others are echoing, what, they believe has been done. And if the fund staff mission had any reservations, including the country office, of course you wouldn't have 100%, which is why sometimes you have waivers and the rest. But we are hopeful that, the conditions will be met, maybe with some polishing of things that have to be done or the rest. So I am quite optimistic that this is based on the facts on the ground. And I think Ghanaians agree generally, that the country has made a very strong, start since President Mahama, came into power with his team. So we do have other reviews ahead. We do have other, conditions to be met, and we have been quite plain with the conditions, in the economy. And I don't think that anybody takes, events like a default, lightly. So yes, I don't think the administration will be complacent. We would analyze where we are, and we would make, tangible progress to make sure that, Ghana gets out of the situation in which it finds itself. I'll be the default situation which I refer to, high levels of inflation, slow growth, and the other phenomena which we all know, has happened, in the immediate past.
Let's talk about the fiscal challenge. And I know the fund has given, again, government thumbs up in the area of the laws that you put in place in the budget. But some are saying that if it comes to law, Ghana has never found itself wanting when it comes to putting in place the right fiscal laws. The challenge has been with the strict enforcement. What do you tell those who would argue that, listen, we've put in place the laws, which has seen the fund gives a thumbs up and pass the fourth review, but the real challenge is about the enforcement, the overruns, the contractors, the commitment and the arrears arguments, which I know will come up. That is where the real challenge is.
Well, what you call the real challenges, incidentally, are precisely what the fund mission came to review. The huge arrears, the debt situation with the harms. If we talk about the harms, we mean major commitments that are going to face, the country. When do we go resume the domestic debt, market to enable us borrow on longer terms, 3 to 5 years. We're getting to 7 years and possibly even 10 years, particularly for capital expenditure, for projects. You don't borrow for 3 months, as we are doing now, with the treasury bills. Basically, treasury bills means 91 days, 3 months. You couldn't complete a project, most projects, in 3 months, if at all. So you borrow 3 months to bridge, for temporary bridges when revenue is not adequate. So, first of all, my immediate response is the very things you set aside as the most important challenges that are going to face the country were indeed the issues that were facing the country. They were the issues on which the IMF program was formulated, and they were the issues on which the staff mission came and gave the compliments that significant progress was made. Remember that this was a 4th review, right? And so that means that there had been a 1st, 2nd, and 3rd review, following the approval of the project itself. So the administration is not going to be complacent, that I can assure you. The administration has mapped out what it intends to do, and the administration is showing, that there is some progress that is taking place. So that is the element, of, I don't think it's a soft targets that have been set. Remember, we are meeting the same conditions that were met, and there was some apprehension, actually, that Ghana may not be able to meet all of the conditions. If I heard the mission when they came, yes. And so it's against the backdrop that within a period of 3 months, the Mahama administration has been able to surmount all those challenges, done deep, dive into expenditure, and some revenue, and brought the deficit, the primary balance, both the primary balance and the fiscal balance, within range of the targets. If this were the case, we would have known by December, right? So there is some tangible progress that has been made, considering that it is now that the fund itself is acknowledging, that significant progress has been made. It means that something else has happened in the last 3 months. And let me say that, as I said, the president and his team do not lack the experience, in going into a fund program. This is a government that started, with the MERS Mahama after President, Rawlings, if you were to take out, the 2 competing administrations. And so, and the fund has dealt with, in fact, most of the people who were seated around the table in the African department in particular were people who had dealt with Ghana for a very long time. So while saying there won't be complacency, we do acknowledge that there is a lot of work that has to be done.
And I get the assurance from you is that in terms of fiscal discipline, in terms of checking the overruns, in terms of those challenges that caused the program to derail a little bit, we would not see that this year and going into next year.
I think the numbers spoke for itself, right? So let me take 3 examples. Why did we default? We were not paying, right? We met one of such big challenges by going into reforms that we were implementing previously, which is setting money aside through the stabilization fund and the sinking fund to meet those commitments. Within a short period of time, we built up, the necessary reserves that were needed. One would have thought it would go into consumption, it would go into some other, but no, the sacrifice was made, just as we had made in the past, if you remember. To take off the first sovereign board substantially before the MPP administration took off the balance, right? So I think we are talking about things, which the staff are acknowledging based on facts. We know the arrears. We know there were huge arrears. What the government promised was an audit. It's underway, right? But nonetheless, some payments have started, particularly with the energy sector, debt. And these are the things which, the IMF team, all the way up to the managing director, was acknowledging. They knew the program, and I don't think that they would, have made us complacent if they didn't think that there was some substantive, progress that has been made. Of course, the caution is that Ghana should avoid, the hiccups that come with starting, well, and then change of administrations often lead to, other derailment of programs so that we can make a progress. If you were there, you heard the sentiment that Ghana should be leading, in the economic maturity of the continent. And I think that is something which we all as Ghanaians must acknowledge, that Ghana is held in high esteem when it comes to African matters, and it's up to us to live up to that expectation.
And you are quite convinced that come June, we will be able to, the staff can go to the board and tell them that whatever things that we thought Ghana should do, they've done that, and therefore they should approve the $370 million for Ghana?
I'm quite optimistic, because the first hurdle, to buttress the point, the first hurdle is agreeing with the staff. They are the technical staff, that, and they go through the numbers. You can see that they come into town minimum of 2 weeks, and they go through the numbers. They go to Bank of Ghana, they go to Ministry of Finance, they go to Statistical Service, they verify the numbers. They have backstopping, what we call backstopping, back in Washington, which is also looking at the numbers at the African Department and other departments like the Fiscal Affairs Department, and confirming to the staff in the field that yes, some progress is being made. So they wouldn't have come, to say there was progress if, of course, there wasn't, progress, being made. You spoke about the laws, the laws. We are talking about the difference. The one big difference is the Public Financial Management Act, PFMA. Remember that law was passed, by the Mahama administration, the last Mahama administration. Let's say it is a revision of the Financial Administration Act, which was, outmoded, like many laws. Now, the two elements that we are talking about here is the Fiscal Council, and the assurance that when you establish a Fiscal Council, they would bite. That's a concern of the fund, because we had a Fiscal Council. Okay, so what has been done now is to put it in the law in very specific terms, that there will be a Fiscal Council. It looked like something which the executive had to do, but now it's in the law, that it had to be set up. Then, of course, I mentioned measures like the PRMA, the Petroleum Revenue Management Act, which we ourselves passed and said we would devote partially to settle debts, which we didn't do. That itself has also, been saved. I mentioned energy. So, in actual fact, these are substantive issues, which were coming up, for discussion. And I think we should be assured. We should be assured that, some work. The assessment, let's say the assessment, will be convincing to the board, to allow the board to approve the fourth review, and then we move on, fifth and last review, and then it will be up to beyond that. It will be up to whether or not we could have a homegrown policy, right, so that this going back to the fund most of times. It's okay to go to the fund. Countries have what we call the policy support instrument, which is because the IMF will always have oversight based on Article 4, right? Article 4, so can we use that as an assessment when Article 4 is done to assess our own homegrown policy on a continuous basis, on a regular basis? For example, you could put in a clause, which says that our debt should not exceed 65%.
But I don't know, the reality is that capping debt has shown us, even when you come to Bank of Ghana borrowing, may not be a prudent thing to do.
But we achieved it before. That's the point I'm making. The Mahama administration ended at 57%. Against great odds and against a lot of sacrifice, remember. Because if you are going to control debt, it requires a sacrifice. Because you've borrowed, right, to meet the budget deficit. You have borrowed for construction, right? You must either make sure that the projects like the airport, Terminal 3, projects like the Chabo processing plant, the revenue is being generated. Remember this, the Chabo plant and the energy sector was to be part of the waterfall. Why did it collapse? That is the point. right? But these were things which are not new to the current administration. In actual fact, the waterfall mechanism was put in place by the past Mahama administration. The debt repayment account, which was stopped and for which we were, we had to go into a default, was started by the Ms. Mahama administration. So I'm saying these are not things that are alien. The caution, again, let me repeat, coming from the fund is that Ghana should endeavor beyond these bipartisan political, differences to let the programs sustain when the program is working, in order that, we can leapfrog into where some African countries now, the emerging economies and the others have gone to.
When we come back, we're looking at how do we sustain the confidence. Already we've seen the city and what has happened to the Ghana city. Also, the issue about taxes has come back again, and the IMF MD in her press conference raised the issue about we need to do more in the area of domestic revenue mobilization, and also the bit about, as I spoke about, the bit about the confidence and sustaining this going for. This is PM Express Business Edition, engaging the economic advisor to the president, Honorable Seth Terkper, about the IMF program, the economy, and sustaining the confidence going forward. We'll be right back after this break. Welcome back to PM Express Business Edition, coming to you live from Washington, D.C., USA, as you talk about the economy and Ghana's program with the IMF. Indeed, I'm engaging the economic advisor to the president, Honorable Seth Terkper, and he's also a former Minister of Finance, having had some stint with the International Monetary Fund, as we discuss the fund program, the economy, and also how do you sustain confidence going ahead. Honorable, thank you so much for your time, and I really appreciate it so much. There's another bit where the fund is still worried about domestic revenue mobilization. The fund thinks that you are still not doing much in this area. It comes to the challenge of reforming the tax laws, being aggressive, or some would say hiking the rates.
Well, thank you very much. On this matter, we actually did revamp all the tax laws. Of course, it's about a decade. So normally what happens is that typically between 8 to 10 years, some say even 5 to, you should be reviewing your laws. I think some of the revisions that we did to the Income Tax Act, to the VAT Act, has affected revenue mobilization, particularly the VAT Act, to the extent that the IMF is now going to field, a whole mission to come and look at our VAT Act again. That will be the third major review of a VAT law. It is not the way to run laws. The first one was when the introduction of the VAT itself failed, and we had to reintroduce the VAT. Excuse me. The second one, was in 2013, I believe, when we decided to revamp all the revenue laws from income tax. We even created an excise act, and the new VAT Act came on. Then, of course, we came in with levies, so many levies, many of which were actually part of the taxes that the VAT replaced. And now to the point where they have encouraged evasion and avoidance so much, that we need to strengthen the laws. And mind you, there's a physical aspect which affects revenue. We have seen the phenomenon of containers and others being moved out of the port, right? Customs must come to mind. And if the goods, were no cables, or if the electricity company cable saga were also to be happening on the, let's say, importation, private importations and other importations, it meant that we are losing revenue. Right? There may be an exemption for cable, it may not generate revenue by virtue of they being used for social purposes and the rest. But if containers are able to move out of the port in those numbers and at those values, is it possible that goods on which customs duties should have been paid import VAT could have been paid, import excise could have been paid. Is it possible that they are going out? So you see, the analysis is going beyond just the fact that it's affecting electricity corporation. And when I spoke to the Commissioner General, he said, Honorable Terkper, we are looking at all aspects, of this incident to make sure that, it is not affecting not just our fiscal operations, but, revenue as well. So the caution from the fund is to allow the laws, to operate. Okay. And at the risk of repeating myself, let me say that much of the requirements, much of what we are being told to do to sustain the program are not new, right? The key revenue part, the two key revenue parts are the VAT, which I said, I think you may have heard during the meeting when you were around, that there was a mission already that had visited Accra. That's how fast this issue was taken seriously. We were told that the mission is reviewing, the report at headquarters, and another mission, this time from the legal department of the IMF, which help us, would move quickly, to help us rewrite the VAT Act. I would hope that we'll let the Act remain, because the thing about VAT is that businesses must be allowed to take the taxes to offset the taxes they pay on their input, the VAT they pay on their input against the VAT that they charge, when ultimately the consumer has to pay. If not, then it goes into the cost, of operations. So there's a legal aspect, and then the other aspect is the automation. You recall that again. This is not new to us. You recall that the creation of GRA with the Ghana Revenue Authority to replace the Revenue Agencies Governing Board. You recall the merger of IRS, and VAT service, right, to form the Domestic Tax Division. Let me just end with these two. Now, when you merge VAT and you merge income tax, there are staff who were doing only income tax. There are staff who were doing only VAT. You need to retrain them, because now they are going to be handling, both tasks. You also need to look at the offices. There were separate VAT offices, domestic offices. There were separate, income tax offices. You need to merge them. The mergers took place. The question is whether, one, the staff have been adequately trained for all these years on both sides. I'm not inferring that the training was not done, but was it sufficient to make the tax robust? So in addition to affecting the structure, the changes in the structure of the law, I don't think that the merger was completed, because if it was completed, we wouldn't have a condition in the IMF program which says that we should introduce the integrated, into bracket, domestic tax administration system. Right? Because if you had only a VAT system, and the income tax system was weak, we all knew. You need one that will replace both, right? And strengthen compliance, and administration. How does this strengthen compliance in particular? You see, because we are an import-dependent country, excuse me, because we import most of what we consume, we import most raw materials, we import most equipment. When the goods come from overseas and land at the port, the VAT must be collected on it. But at that point, it's not consumption. VAT is a consumption tax. So when the businessman who pays the import VAT at the port uses those goods to produce goods or sells them, right? If it's raw material, they use it. Okay. They must be allowed to offset what they paid at customs against the domestic. Customs is sitting electronically through ICOMS on all this information, which, because there is no integrated domestic tax system, first, they cannot use the customs to check malfeasance, to check whether somebody is oversetting the tax they paid at the port, is not doing the right declaration. We also miss the opportunity of using even the VAT information, right, to check your level of income and expenditure, which now we have moved from VAT into corporate income.
Honorable, my argument is that you have been in this space for quite a long time, that what is our struggles? What is our challenge that maybe because we are under a fund program, now the fund has to come in to help us even restructure our VAT laws and our VAT programs and to collect more? I mean, some will say that isn't it an indictment on the country Ghana, the company Ghana?
It certainly is an indictment, because remember in our last segment we said that the fund was urging us to sustain our reforms, right? To sustain our reforms. It's not always that we do not know what to do.
But that's what they come across.
Yes, no, it is that we do and then undo, and we have to do again. The same thing, right? So whether this is bipartisan, whether this is the fund is saying, it's about time we let the tax laws, it's about time we let the reforms we made, it's about time all the things that we've been talking about, right? Let them sustain them, and it's only then that you gain experience, in implementing them, and that will bring the domestic, revenue mobilization. Secondly, the fund is saying, to us, that the admonition which we are talking about is what I'm referring to, right? It's telling us that, we have gotten our tax systems, our expenditure systems and the rest above many African countries, right? And this back and forth, it's not helping, So I think the message being sent across is that we get things right, but we don't maintain them, we don't sustain them. I think that's the message that was...
Okay, but let's come to one thing that is happening, and we don't know whether we can blame it on the performance of the dollar itself on the international market, but some are also linking it to the fourth review. The dollar has seen some strong rallying just over the past week. The argument that there's a fiscal component to this whole performance about the Ghana city. From the fiscal side, what is the assurance do I get from you and the minister and the president itself to keep your eyes on the ball, that the overruns and those other things would not derail what we are seeing right now with the Ghana city?
Well, the dollar has had a difficulty, that's for sure. This is something which the governor was talking and explaining, right? But then, excuse me, there has been certain phenomena which has also affected the dollar. For example, if you are not collecting enough revenue, or if you are not promoting your domestic industries very well with good policies, you end up importing all the time, and you'll be depleting your reserves, in doing that. But there are other fiscal reforms. The hints of stopping, the haphazard way in which, gold was being handled, from, the mining of the gold itself to its marketing, right, has brought some expectation that things will be moving in the right direction. And I believe I heard the governor talk about, since the measures on gold were announced and actions being taken, the reserves, coming from gold, has started increasing. So we need to, but again, we need to generate forex in very sustainable ways by supporting exports, right? And this is where institutions like the Exim Bank come in, to be able to give loans, to local businesses so that they will be able, to export. And when they export, they earn, forex.
But I am coming to the fiscal discipline bit, because there are some who are saying that there's always a fiscal component, and so what commitment do we get from the executive, your advisory, that the president himself, the Minister of Finance, the fiscals, to ensure that at least we sustain this good run that we've seen since the last quarter of last year to even now?
The president, yes, receives advice, but the president is familiar, very much familiar, with most of the admonitions which Ghana is receiving. I say so because let's remember that this is the president who sanctioned putting money aside, even at dire moments, for us to be able to pay our debt. If you don't pay your debt, it's fiscal. To come to haunt you. It's even social. your Ghanaians will suffer haircuts, right? As they did, because you were not able to pay, and you don't expect foreigners alone to do the sacrifice. So Ghanaians will have to do the sacrifice. I just spoke at length on the need for us to automate the system, continue with, the reforms. And then, of course, there is the expenditure element, which involves auditing, the minister spoke about commencement certificates, a commencement system beyond just certificates, which will be verification, and to ensure that before, when we say commencement, it means being given the fiat to commence a project, particularly the major ones. That's what we mean. Making sure that the ministry that is going to embark on that project has enough commitments, enough provisions in the budget, before embarking on the project. Otherwise, you will end up, starting a project, as we have, with so many at different stages of completion, right? So these are the things which, again, we need to pay attention to. And again, they are not new. These are areas in which, for example, we strengthened the gift means. Later we heard about how expenditure was going behind the gift means were not being recorded. These are the things for which we were being admonished to allow, reforms to work.
Finally, Honorable, as you try and wrap this interview up, the bit about also the confidence, the signaling. I know there was an investor engagement. It has sent some signals across the investor market about government's commitment to fiscal discipline. How do we also manage this renewed confidence in the economy so that things do not get up? As you wrap up on this discussion, Honorable.
By doing things right. First of all, when you talk about investors, the type of investors we are talking about are people who give us money. Many of them do not give the money because they are coming to set up businesses, right? They come and buy our bonds, right? That's a non-residence. They come and buy our bonds, or they provide money to buy our sovereign bonds, which we then come and use to do developments, to do projects, right? Your ability to continue doing projects depends on patronizing these sources of financiers who are buying your bonds, because, every country borrows to do projects, right? But for heaven's sake, what they're saying is, when we give you the money and you promise to pay in, by the way, not just the foreigners, most of those who we met were foreigners, but including our own domestic pensioners and the rest. When we give you the money, right, the hard-earned pension, the hard-earned savings, and you promise that in 3 months' time, right, you would pay me back, which is a treasury bill. Let it be my prerogative to decide to keep the money with you. Don't default in paying. When we give you money, maybe I have substantial money or some windfall, which I want to invest for my children. I want to deny myself now. So I put in a 3-year bond. Why 3 years? 3 years maybe when someone in SS1 will be what? Going to school, completing, right? Or somebody in elementary school will complete it. There are reasons why people save, or even to marry, right? When that time comes that I need the money, don't tell me, I don't have the money to pay you. That is a default. These are the meaning of default. And this is where the investors are coming from and saying that countries borrow, but the countries that do well have mechanisms for paying. My word is my bond. That's where, the word bond comes from. My word is my promise, to pay you back. So, but again, the investors, seem to be optimistic, as you put it, because many of them, remember, at the time they gave us those monies, the sovereign bond, the domestic bonds, which didn't used to exist, and the rest, right? That was when we were also putting measures in place to make sure that we don't go hippie, to make sure that we do not default, right? And so that is the vision, that's the promise. And I would hope that, or expect rather that, we would implement some of the measures that we're bringing, the confidence back in the economy. You mentioned the Fiscal Council, that a council is a council, so that it is also the CIS changes to SEL counseling, so we can take all these seriously. And this is what has always been ringing. Don't raise our hopes and then dash them again.
And that's how we draw the curtain down on PM Express Business Edition. It came to you live from Washington, D.C. Just on the sidelines of the just ended IMF World Bank Spring Meetings in Washington, D.C., USA, as you looked at the Ghanaian economy and the fund program, and how do we ensure that we end on a good note. I know the debate will still go on in your homes and your offices about what can be done to firmly stabilize the economy. We'll be on track with the program and ensure that we indeed end on a good note. You heard the economic advisor to the President, Honorable Seth Terkper. This is PM Express from Washington, D.C., USA. Have a great day.